Ladies and gentlemen, good day and welcome to the Q1FY27 earnings conference call of Clean Science and Technology Ltd. We have with us on the call Siddharth Sikchi, Managing Director and Promoter, Sanjay Parnerkar, CFO, and Prateek Bora, President Commercial. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Siddharth Sikchi for opening remarks. Thank you, and over to you, Mr. Siddharth Sikchi.
Thank you so much, Ikra. Good evening, everybody. Thank you so much for attending the call on a Saturday evening. So let me start by welcoming everyone and a warm welcome for the Q1 FY27 earnings call of the company. And I thank you for joining the call. Let me first speak on the business environment. The quarter performance shall be viewed in backdrop of geopolitical headwinds impacting raw material supply chain and its cost. Non-availability of shipping vessels impacted timely export of goods, leading to supply side challenges. Further, the raw material costs in China were not impacted as much as they were compared to India. Despite external challenges during the quarter, Clean Science reported a steady performance during the quarter. The company was able to improve revenue, maintain operational stability, and continue progress on its value-creating initiatives. We are also pleased to report our highest ever consolidated sales in company's history, reaching approximately 264 crores during the quarter. Let me speak on the standalone business performance. On sequential basis, the revenue improved by 5% to 203 crores, largely due to increase in realization in all the products. The EBITDA and the PAT margins are at 43 and 36%, translating into an EBITDA of 87 crores and PAT of 73 crores. The Q4 FY26 EBITDA and PAT, after adjusting the one-off operating expense transactions, is roughly 83 crores and 53 crores respectively. Thereby, the current quarter EBITDA and PAT reflected a growth of 5 and 37% respectively. The Q1Q increase in revenue was primarily led by improved realization in all the segments. Speaking on YOY comparison, the sales were moderated by 6% during the quarter. The revenue moderation was primarily led by decrease in sales volume, which was on account of supply side headwinds as mentioned earlier. The demand environment continues to be steady. On consolidated business performance, the HAL scale-up continues to drive operating leverage and sustainable profit improvement. HALS is now 22% of our sales, and we have been able to de-risk our reliance on the top 4 legacy products by moderating their share from 85% in Q4 FY23 to 60% this quarter. Another important point was that CFCL reached an important milestone by becoming operationally self-sustaining. Having fully recovered its operating expenses, we now shift from investing phase to monetizing phase. Our first year of HAL sales were entirely domestic. In contrast, the current quarter reflects a much more diversified geographical mix, with exports contributing nearly 50% of the HAL sales. On sequential basis, the consolidated revenues grew by 7% to 264 crores. EBITDA and PAT are 37 and 28% respectively, which stands at 96 and 73 crores respectively. On YOY basis, the revenue increased by 10% during the quarter, and the increase in revenue is primarily led by consistent scale-up of our HALS business. Hence, the sales profile looks like performance, pharma, and FMCG, respectively 83, 10, and 7% respectively. I would like to take a minute to discuss the key business development which happened during the quarter. Point 1, we entered into a strategic collaboration with our Swiss partner called as Genus Chem. This represents an important step in the next phase of our HALS journey. This will provide Clean Science an entry into differentiated advanced grade of HALS chemistry that are technology intensive, value added, and aligned and evolving global customer requirements. Taken together, these developments reinforce our confidence that HALS platform can evolve into a much stronger growth driver for the company over the coming years. With expanding customer acceptance, improving export penetration, and a richer product basket, we believe that the platform is steadily moving towards more meaningful scale, stronger margins, and greater strategic importance within the company's portfolio. The stabilization of the hydroquinone catechol plant has been largely completed, and our operations are now progressing well. We have received the necessary customer approval and are ramping up for commercial supplies. As the production scales up, we expect a gradual increase in revenue in the coming quarters. On a CapEx update, the Performance Chemical 2 will get commercialized by Q3 FY27, and during the quarter, capital infusion in the subsidiary was approximately 100 crores. With this, total investment in the subsidiary stands at approximately 850 crores. I think that's all from my side, and I'm open for any questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjesh from ICICI Securities. Please go ahead.
Yeah, good afternoon. Thanks, Siddharth. Got a couple of questions. First on the HALS, what was the volume this quarter? Because the Concall minus subsidiary, it shows we have grown close to 170%. So what was the mix of volume and pricing, and how much was the contribution of the products beyond 701 and 770?
So, in terms of price realization, Sanjesh, the product mix has improved. From 77062, we have now moved to the higher grades. So I think the average prices have moved from 440 odd to 550. So this is in terms of price realization. And in terms of volumes are, Sanjesh, volumes are in the 1,000 ton. And the product mix has significantly improved to the higher grades of HALS, meaning, last quarter where almost 50% of contribution came in from HALS 770. This quarter, it has come down to 35 odd %. And hence, the gross margins have improved on the subsidiary level.
Got it. So that we were looking at close to 3,000 metric ton for HALS this year. You think you can do much better than that? We have started with 1,000 metric ton in Q1.
Yes. My HALS guy says yes, they can do it.
So what are we looking at now? And even the export has picked up. You mentioned that 50% of the revenue now HALS is coming from the export market.
Yes.
So what is a realistic number we are looking at in HALS for FY27?
Annualize this quarter is 250-300. So if you just annualize this also, this will reach to 250-300 crores of annual revenue.
That we are very comfortable, correct?
Yes, that should be comfortable.
Now, second question on the gross profit margin. Last year we were hovering under 40%. This year, consistently above 40%. Was there any benefit of low cost acetone we were carrying, and price increase will help us and lower raw material cost is benefiting on gross profit margin, or you think this 43-45% of gross profit margin in this segment is sustainable?
I think it should be sustainable, and we had no real advantage of cheap raw material. In fact, we since moving to higher grades and of course improving our operational efficiencies has helped us to get to these margins.
Got it. Got it. One last question on HALS. Can you give us more detail on Genesis? Are we also trying to acquire 25% in the distribution company? And it's more like a distribution company, right? They are not really a technology company.
How did you get that?
No, I thought I read that in the press release. I was a little confused. So what is the transaction between us and Genesis?
No. So the deal is, if you go through their website, the founders are highly technical people, and they have come up with advanced HALS technologies. They have developed and patented products in Europe, US, Japan, and I think also China. I am unsure of China. And these are far advanced level of NOR-HALS, which is called. And these products will now be made at Clean Finochem and supplied globally. With this, we will get entry into some of the very advanced level of customers who would also buy these advanced grades, but also help us in our other portfolio of HALS. So it's a very, very IT-driven company.
And the tech transfer is happening from them to us, or how is it?
Yes. They had developed this very interesting technology and this patented product, and the tech transfer is happening, and the plants will start in Q3 this year.
And what is Clean Science paying for all this?
Sorry?
So the tech transfer and all is for the production, and we will be official contract manufacturer for this Swiss company. Is that the way to think of it? We are a contract manufacturing with the tech belonging to the customer.
No. We are also doing joint marketing.
Okay.
Yeah. So we will also be joint marketing this product.
And the product will be exclusively supplied to them, or we are free to supply to anybody?
So we have some geographies defined between us so that we don't want clash, but everything will be like a co-branding. Yes, it will be like a co-branded product where their name and our name will appear on the packaging and in all the documents.
Got it. And what is the revenue potential we are looking for from this partnership, say in 28, sorry.
In overall 3 to 4 year period, we are looking at 300 to 350 crores of revenue, additional revenue.
From this partnership?
Absolutely.
Got it. That's pretty clear. Last on the legacy business, the decline was largely because on a YOY basis was largely because the non-availability of the raw material?
Yes.
Or
yes,
there was it's only because of raw material availability.
Yes, because the main primary supplier in India had to shut down the facility due to non-availability of their key raw material propylene. So we had those, I think, about 2 weeks of ore shutdown, which led to this. The demand is absolutely steady.
And starting Q2, we should see all those recouping, and then all the volume we should be to the normal level, or there is still challenge?
No, volumes is not an issue. Raw material pricing is an issue, and availability of shipping vessels. I'm sure this is across the industry.
Got it. One last question. What is the now economical difference between anisole to MEHQ versus HQ to MEHQ? Are we still competitive, or you see Chinese competition still being intense in the MEHQ and the value chain?
See, so far we are not seeing, otherwise you would not see these numbers, right?
Correct. So we believe that HQ is still not as competitive for us to threaten the market share.
I think so.
Clear. Thanks, Siddharth, for all those answers, and best of luck for the coming quarter. Thank you.
Thank you. Next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi, Siddharth. Thanks for the opportunity and congratulations for a good ramp up in health. First, a clarification on this strategic collaboration. You said the product will be jointly marketed by you and the partner here. So the global markets are divided that, this X countries go to Clean Science and the balance go to you, or how is it? And this $3.5-4 billion.
See, let me answer one thing at a time. See, they are based in Europe. They are present there, and they have already conducted a lot of trials over the last couple of years and have established a solid customer network. Okay. So there is no point in us duplicating those efforts. So hence, there has been a clear geographical differentiation. Wherever they have done enough work, they will market it. Wherever they are not present and we are present, we will be doing it. So it's a very, very collaborative partnership where we have very open discussions to understand who is where, and wherever strengths to be needed, we will do the needful. Because it is all going under co-branding.
Sure. So this 3.5 billion, 350 crores revenue that you are talking of, this is as a product of, as a sort of, output of this collaboration. Is it the case that you are manufacturing from them on their behalf as well? So for whatever they sell, you will be manufacturing here in India? Or this 350 sale is only from your fresh sale as a B2C or B2B to B2C?
No, it is only from us. Their sale is over and above. So say I am selling them, I'm just giving an hypothetical example. If I am selling them at say 30 euro, that is my revenue.
Correct.
And if they sell at 40 euros, that 10 euros is their revenue.
Yeah, which is fair, but your direct sale is this 300 crore target that you're talking of, and if you are manufacturing anything on the partner's behalf, that's a top-up, or everything is inclusive of this 350?
Direct sales to the market is incremental to this.
No, 300 crore is only with them because they have prescribed volumes which they have some understanding on or commitments on. Over and above whatever we develop, say if we sell 100 ton in India, that is over and above this.
Okay. Got it. And fair to say that given that you are saying that this is, further differentiating and more advanced versions of HALS, grades, we were not supposed to manufacture these ones, or there is some overlap, and this will be having much higher realization here.
No. This is a further better product and one of its kind, and hence these are all patented products by them.
Sure. And whatever we are making on HALS on using our tech, that continues as it is, which is the ramp up that you're talking about.
And one of our raw material, 2020, which we will be making, will be a key starting material for this chemistry. So this is an additional market for our own 2020.
Okay, that's clear. Secondly, on the Chemin agreement, wherein we are supplying the key ingredient for food and feed. If you can put some light there.
I mean, the light is that we have very, very close relationship with the customer over the last decade, and I think they are increasing their demand. We are fulfilling them, and because we would be making additional capexes on some of these products, so we thought, both of us decided to enter into a longer term contract for a minimum period of 5 years. Where we will be supplying their needs of these products, and that is where it is. So it's a very, very interesting collaboration for us because it gives us an assured volumes from the largest customer in the world. So they currently buy BHA, BHT, TBHQ, which are all, and AP, these are all our product portfolio which we supply to them, and we have now an exclusive, more or less, we will be their supplier for all these products.
Sure. So a few clarifications. One, Kemin must be getting this source from somewhere, or was it captive for them, and whom are we replacing?
No, it was, so Kemin is an end customer. They make formulation for pet food industry. So they are a manufacturing company with global locations, and we will be supplying these three ingredients to all their global locations.
Okay. So the customer continues, just that the size and scale is much higher now, and you are getting a 5-year commitment.
This is not a new customer. He continues to be our existing customer for 10 years. We just increase the wallet share with that customer.
Sure. And will this commitment... Yeah, go ahead.
Yeah, will this commitment?
Sorry, will this commitment require you for another incremental capacity addition, or the existing capacities are suffice to fund this?
No, we will need additional capacities, and we have already started the process of that.
Sorry, there will be requirement of additional capacity, you said?
Yes.
Okay. Thank you. And third bit on, the margin profile on the standalone side. While revenues have been, you highlighted in your initial comments as well, the Q1Q increase is largely led by pricing, volumes are flat. The margin slight dip that we are seeing here, even on a Q1Q or on Y&Y basis, is largely because of the pricing volatility, RM volatility, or there is a further pressure on the end product pricing also?
No, I think the major factor is the raw material pricing because of these Middle East crisis. So you can see there has been increase in our RM prices.
Okay. So, and end product prices here remain stable. So from a competitive intensity perspective, no changes at the global level?
Not at the moment.
Okay. Fair enough. And just on the standalone side, what could be the domestic export mix for the quarter? If you may help with that number, please.
65-35.
65-35. Okay. And lastly, if you can guide on the CapEx, what should we take as an annual run rate going ahead, given there could be some capacity expansion plans there?
Actually, we have not worked out in that detail, but it's not going to be too much. We are still working on it, and I'll be able to let you know in due course.
Okay. No worries. Thank you, and all the best. Thank you.
Thank you, boss.
Thank you. Next question is from the line of Abhijit Akella from KIE. Please go ahead.
Good afternoon. Good afternoon. Thank you so much for taking my questions. First one, just on the supply chain disruptions that impacted volumes in the quarter. I was just wondering if it would be possible to share some, color on how much better the earnings would have been. I know the quarter's already, significantly improved, so my compliments on that. But could it have been somewhat significantly better had it not been for these issues?
Yes. So of course we lost a couple of weeks. I think to be precise, about 2 weeks or so in production. So of course, if we would have been able to produce, we would have got higher revenues. That is number one. And number two is also with these all labor issues we faced because of these gas issues and all. That was another challenging time. So if these issues weren't there, then I think you would have seen a better quarter.
So things are looking much smoother now in the second quarter, is it?
Yes. The issues which I mentioned with availability of the prices are volatile. That is still an issue, but the availability is there, which was not the case in quarter one. So yes. So I think all those issues are now behind us, except the RM volatility.
Understood. And on the price hike side, were you able to fully pass along all the input cost increases that happened last quarter, or are there still some further increases that you're taking?
No, wherever we had long-term contracts, we are respecting most of them. And so in that cases, we are not able to pass on. And also, it is not like, I mean, we were not able to pass on 100%. In some cases, we were able to pass a percentage of the price increase.
Okay, fair enough. So compared to the June quarter results, which we are just seeing, we should not expect any significant price increases benefit next quarter, right?
Yes, price increase might be a big question.
Okay, understood. The second thing was just on this 300 odd crore revenue number that you quoted for the Genius tie-up. Just wanted to clarify that this is a cumulative number.
Of course, it's a cumulative number over the next 4 years.
Yes, understood. So the peak number in year 4 might be, say, some 100 crore plus minus somewhere in that range. Is that so?
Possible. Yes, that understanding is right.
Okay, great. Thank you. And on the Performance Chemical 1 and 2, I know you made some comments, but if it's possible to just share your thoughts on how both those projects are going.
Yeah, so the hydroquinone catechol I mentioned, we started the line somewhere in Q3, between October, November, December, the trials. The product trials started in first couple of months. Of course, then we had these crisis, raw material shortages, so we were not dedicating too much raw material to that facility, but running our regular businesses. And again, we restarted the operations in April, again Q1, and now the plants are more or less stabilized. In the meantime, we took this period to sample with our all international existing customers, and most of these sampling processes are almost over. We have got some approvals, and now I think starting August, September, the revenue should also start coming in. And plus, there will be operational efficiencies, improvements will also keep happening as we ramp up the capacities.
Great. Thank you so much. And just one last... Yeah, sorry, please.
Okay, and Performance Chemical 2, the plant we expect to start in Q3, which would be November, December starts.
Yeah. In terms of the ramp up for Performance Chemical 2, any thoughts on that aspect?
Thoughts in the sense?
I mean, just with regard to timelines, should we expect a fairly...
So let's see, Q3 and Q4 will majorly go into setting up the lines and, getting the right product quality. So we expect the major revenue should only come from Q1 next year.
Okay, great. And just one last thing from my side on the Chemin agreement. Congratulations on that, by the way.
Thank you.
So, how large is this customer as, maybe as share of the overall world market for these relevant products? That was really the question. And I guess this agreement now basically preempts any other, possible new entrant into these products from getting into a tie-up with this company, right? Yeah.
Absolutely. So he is the largest buyer of some of these ingredients, and the relationship now gives both of us, both Chemin and us, the strategic alliance where we make sure that there is no shortages. In all these difficult times, we have been able to supply without any price hikes, which has given them that confidence over the last several years. And hence we have entered into this definitive 5-year of contract. And yes, you are right that I do not see any scope for any other entrant or new entrant or any competitor from India or globally to get into this alliance.
Got it. Thank you so much, Siddharth, for all the questions. Wish you all the best.
Thank you.
Thank you. Next question is from the line of Saurabh Banik from Devis Consultants. Please go ahead.
Good afternoon, sir. Congratulations on a mixed set of numbers. Sir, as per your presentation in this quarter, you have mentioned that HALS stands for around 22% of sales. So I just would like to know from you, in FY27, FY28, how actually plan for that HALS will constitute around which percentage of sales for our company? If you just give us few colors on it.
20% will go to. So basically, I told you in terms of revenue this year, the target is between 250 to 300 crores. Okay? So that could be around 30 to 35% of overall revenue growth. For the next financial year, let us work out and we will come back to you.
Okay, sir. Thank you so much for the information. And second, sir, on health, I just would like to know from you in domestic and export both markets, who are the core competitors for this product as you have mapped out? So if you give us the information about this.
So we have two major competitors in Europe. They are namely BASF and Sabo. And we have a couple of them in China. Major is Rianlon and Sukian, who is also called as United Chem.
Okay, sir. And lastly, on the financials front, in this quarter, on a consolidated basis, I have seen that other expenses, it is surged by around 13%. So any primary reason for this?
Other expenses.
I'm sure referring to other expenses, right?
Yeah. In other expenses, I have seen that in Concall level, it is rises around 13%. So the primary reason, if you can...
Sequentially, there is a CSR impact. In quarter 4, there was a high expenditure towards CSR compared to quarter 1. And there was some provisioning towards some other expenses which was done in quarter 4, which was not required in quarter 1. This has led to other expenses.
Okay, so can we assume is it one of kind of things, right?
Yeah, so quarter 1, you can assume to be a sustainable number.
Okay. Thank you so much for the clarifications. Okay, and wish you all the best for the FY27 and FY28 as well, sir.
Thank you so much.
Thank you. Next question is from the line of Nilesh Guge from HDFC Securities. Please go ahead.
Yeah, hi, Siddharth. Siddharth, my question regarding this new HALS that you will be manufacturing through the collaboration. So what differentiates these HALS from the HALS that currently Clean Science is manufacturing?
See, this is a very technical question, but I will still try and answer in the most simplest form I can. All the HALS we make are called as alkoxy HALS. I don't know. The 2020s. It's not alkoxy. The NOR is alkoxy. Oh, sorry. We make the free hydroxy. But with this company, we will be making the alkoxy HALS, which are called as the NOR. So these are higher grade of HALS because their performance is far higher and superior compared to the conventional HALS which are made. However, these advanced levels of HALS are also far more expensive compared to the traditional HALS. So that is why the applications are also niche compared to the traditional HALS.
Okay. And what about the end user? The industry will remain more or less same, or it will be very specific to
because of these higher grade, these are more applicable to agricultural film businesses. So where higher and harsher environment is there, where these products are used. So these NOR will be used in such applications where tougher environment is there in terms of agrofilms. Also, with this collaboration, what we get is these existing customers also use regular grade of HALS, where we anyways are present completely. So it will help us in cross-selling to the same customer.
Okay. So do you see that these new HALS will replace the HALS that is being used or consumed by the end user, or will it be the totally new market creation?
For us, it will be a totally new market in terms of this particular segment of product. So if a customer is using NOR, he will not replace it with a regular HALS.
Okay. So for you,
Yeah.
Sorry. Go ahead.
Yeah. So of course, this will be a new segment of customers which will come up to us.
Okay. But But as far as the global health market is concerned, will these replace the existing ones, or
No.
it's a completely new market?
Completely new market, which we were not catering at all today. The non-health market is different, which we were not catering. Now we will start catering.
Okay. Thanks a lot. Thanks.
And the non-health market is currently dominated by only BSF.
Okay. Yeah. Thanks, Siddharth. All the best.
Thank you, sir.
Yeah.
Thank you. Next question is from the line of Sanjesh from ICICI Securities. Please go ahead.
Thanks, Siddharth, for taking my questions again. I got two questions. One on the contract with the Kemin. Now that they are signing a 5-year, are we giving any volume-based discount? What is an advantage from a Kemin perspective for locking in the contract?
So it is a supply security.
It's a supply security. There is no additional commercial benefit we are transferring to them.
I think, these are little finer details, but I think you can consider supply security as the major outcome of this contract for both of them, for them as well as for us, for the complete volume offtake. The offtake which they will take from us.
Got it. Second question on the Genesis one. Are these same product goes as a UV stabilizer, or the application is entirely different?
So the application goes into agricultural films, which is a very large market in globally, and currently only, I think, more or less covered majorly by BSF.
But it goes as an additive, right? The use case remains the same.
Use case remains the same.
But just the application is agriculture film which are spread across the field, right? That's the one you're talking about.
Agriculture, higher grade of agriculture films. The normal, sometimes even the normal, some of the grades are also used, but these are for more harsher environment conditions, where more pesticide, sulfur, chlorine is present in the environment.
Got it. Are we putting up any fresh capacity because of the two contracts, or this can be catered with the existing capacity?
No. Both are additional investments.
And what kind of number are we looking at here for the capex?
So basically we are still working on it, but in terms of Genus Chem, I think the plant will start. So where we are expecting for that particular product, we will be putting about 25 odd crores.
Got it. That's clear. And Camlin contract, what is the volume increase are we expecting from what they are buying us today? What could be the quantum increase because of the contract and higher market share?
Sorry, it is not Camlin. It is Kemin.
Kemin. Sorry. My bad. Yeah.
So Kemin is American. So that gives a lot of emphasis. So Kemin, probably our offtake will increase by 20 to 40%.
20 to 40% over 5 years.
Yeah. So
or you will start seeing immediately?
Start immediately, probably in the next 2-3 months' time.
That's clear. Thanks, Siddharth, for answering all those questions.
Thank you.
Thank you. Next question is from the line of Saurabh Banik from Divas Consultant. Please go ahead.
Thank you so much for giving me again another opportunity, sir. Now, I would like to know from you that in this quarter you have done 100 crore of capex in Clean Phenochem Limited. So, sir, if you can please share us the long-term structural plan that you have built for this wholly owned subsidiary. So that would be highly helpful.
So all the products now in future in the company will only happen in this subsidiary, which is Clean Phenochem. So all the businesses, all the new products, all the new lines will all happen in Clean Phenochem only as a company.
Okay. Thank you so much for the clarification. And finally, sir, as we all know, the geopolitical issues are actually continuing and all that, and this is unpredictable and uncertain, we all know it. But sir, how Clean Science is actually, planning out or mapping out for, going ahead for the rest of the 3 quarters. So if you please put some color on it, so that would be again very much helpful for us.
So basically, sir, it is all about supply chain, and we are trying our best to have all supply chain, all raw materials to be delivered and to be present so that there is no delay in any of our productions. So that we have planned quite well. And hopefully we should not see any stoppages in any of our facilities in the next coming quarters.
Okay, so that is what fully confident you are that stoppage will not even there. So it's just casually I'm just asking you. So if you just give us few information regarding it. I mean it is 100% confirmed from your end, right?
Sorry, what is confirmed?
I mean that supply. That supply chain that you said it will not stop. That you are planning on mapping out. That you said. I mean it is from your end totally you are confident on it. That's I'm just asking.
See, मतलब इतना confident नहीं है कि lock कर दिया type से, but
sir, that is uncertain and nobody can control.
Yeah, so exactly your point. And nobody can confirm. So even I cannot confirm 100%.
Yes, exactly. So sir, as you said, that just for that particular reason, I just asked you. So if that happens, so that is definitely better for you and for everybody as well. So that is what I'm just asking.
Yes, sir.
Okay.
Thank you.
So we will take that update on Q2 as well, sir.
Sure.
Okay.
Thank you. Next question is from the line of Rohit Nagraj from 361 Capital. Please go ahead.
Thanks for the opportunity and good sequential performance plus the 2 new collaborations. First question again on the Genius Chem in terms of tech transfer. Is there any transfer fees or royalties that are attached to it, or it is just capex and then okay? So it's purely capex and then the revenues will start flowing in.
Absolutely.
And in terms of since these NOR-HALS are probably niche set of products, the margins will be higher than the current margins on our entire basket.
Yes, technically it should be.
Perfect. And second question in terms of HALS, you mentioned that this quarter was there was almost 50% exports and 50% domestic, and the component of exports has increased tremendously. Is it because of the high-grade HALS that we are manufacturing where we've been able to sell into the exports market and where now we are seeing a good amount of traction?
See, the point is over the last 1 year, the sampling paperwork, all this is happening. See, these are very large accounts which do not come very quickly. So there has been a lot of back and forth which was happening to get approvals to these accounts. And we have now started seeing these approvals coming in, trial businesses happening, and now commercial shipments have started. So this also gives the confidence that all the grades of HALS which we are producing today, which are the higher grade as well as our commodity grades, are now completely approved and at par quality with other competitors in line. So this gives that confidence, and now you can see these ramp-ups are happening in advanced levels of HALS also. Plus, with this collaboration with GC, with these further higher grade of advanced HALS, will open doors to further more customers globally for us.
Right. And just one last clarification, compared to last quarter in terms of the supply chains, things have been better during the month of July?
See, the supply issues have come down, definitely, because now I'm sure all other companies have also started importing and keeping those safety stocks. But the basic concerns remain is because of these volatility in these discussions between these particular countries. The prices of crude oil keeps moving, which impacts the prices of basic raw materials, which impacts our pricing. So there will be issues in profitability, but not with respect to supply position, is what my understanding is.
Perfect. Thanks a lot and all the best, sir.
Thank you so much.
Thank you. Next question is from the line of Shreyans Khatani from SG Securities. Please go ahead.
Hi, good afternoon, sir. I have one question on the HALS business. So we have around 10,000 ton capacity. So just trying to understand how much of that would be the higher grade whereas like 70 to like 2020.
We are not getting into these subdivisions. We are not getting into these subdivisions, but on more or less basis, to just give you a thumb rule, we would be probably 40% lower grade and balance should be higher grade. Now, which are these higher grades, I think is too much detailing, but yeah, so this is the split 40-60 is what you can assume.
Got it. So, and are we currently in a position to produce nor HALS or that would require some plant and machinery?
No, I think it's a completely new setup, new technology which we have acquired from this partner. So yes, it needed a capex and hopefully we'll start the production in Q3.
Okay, got it. So second question, I joined a little late, so maybe might be a repeated question. So on the Performance Chemical 2 plant, are we on track for September production beginning?
No. I think there will be delay because of all these labor issues we had over the last couple of months. So yeah, I think there would be a delay and we expect to plan to start in November-ish.
Okay. So that will be commercial production or trials in November?
Commercialization. So I think in between November and March will be stabilization phase and you can expect any revenues from Q1.
Okay, I see. Got it. All right, that's all from me. Thank you.
Thank you so much.
Thank you. Next question is from the line of Manish, an individual investor. Please go ahead.
Hi, sir. I'm audible?
Yes, sir.
Hi, sir. So thank you for the opportunity, sir. So I've been with you guys since the IPO days. So as a layman term, I had few queries. So the first query was regarding the HAL export, since we're exporting more HALs now. So do we see the EBITDA margin and profit to increase for 2-3 quarters, 2-3 years down the line?
And will we see?
Second query is regarding
EBITDA margins will keep improving because as we get into sales of more and more higher grade, the EBITDA margins will keep improving. Plus, running the plant over the last couple of years, the operation efficiencies also kicks in. So we are very confident that the EBITDA margins will keep improving.
Okay, sir. So second query is regarding, the last 2-3 Concall you had issues because of the Chinese competitors that were affecting the business and also because of the tariff. So now we have a sort of idea about what tariff means US will impact on India, will put on India. So do we see any orders coming from the US or any inquiries from the US for this? Is it good as of now? And has the China competition reduced?
Our exports to US have been very, very steady.
Okay, sir. Okay, sir. And the third thing is regarding the Middle East crisis. There are two parts to it, right? One part is the prices of the raw material, and the second part is the shipment cost. So now both are high, right? So that will impact our profitability maybe for some time till the issue gets resolved. Is my understanding correct?
Absolutely correct.
Okay. And so the fourth part is, we had the Europe, right, India-Europe deal signed. It will be active, I think, next year. And we have a subsidiary in Netherlands. So that subsidiary is for the planning, for future planning, right? So we will cater for all the clients for the Europe. Is my understanding correct there as well?
No, we will be starting the subsidiary in mid-September and it will be operational starting there.
So, and that will cater the Europe demands.
Of course.
Okay, sir. Okay, sir. Oh, all the best, sir.
Thank you so much, sir.
Just waiting to grow with you guys, sir. And so one more thing. Sir, from the last two calls, I was not able to ask any questions. Can you do one thing? Can you allocate 10 minutes of your con call to retail investors at the end so that if the retail investors have some queries, they can ask you? Because we have only 1 million to contact you, sir.
No, sir, absolutely. I mean, it will
Thank
be
you, sir.
there are no issues, absolutely there.
Yes, sir. Sir, thank you very much, sir.
Thank you so much, sir.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Siddharth Sikchi for closing comments. Over to you, sir.
So thank you all for attending the company's quarterly performance. I really appreciate all of you taking your time out. And if there is still more clarity, you can reach out to us. But thank you so much. Have a good one and have a great weekend.
Thank you, sir. On behalf of Clean Science and Technology Limited, that concludes this conference. Thank you all for joining us today, and you may now disconnect your line.